Back in the office with Nick Ball from Inovayt Finance. Thanks for coming in, Nick.
Thanks for having me, Casey.
We thought we'd give you a quickly monthly update on what's happening in finance, lending approvals, what Nick's seeing in the current market, and then we'll dibble a little bit further into negative versus positive gearing.
Yeah, absolutely.
How is the market? What are we seeing?
I think from a lending point of view, it's probably as a team nationally, we've sort of sat back in the past 2 weeks and discussed that it's probably starting to get easier than it has been.
That's positive.
Than it has been in the last 12 months. Whether that's because we're making better lender selections and the lenders that our clients are wanting to use are faster, have more appetite, whatever it may be. But we're generally feeling, like a bit of weight's off our back in terms of what the last 12 months has been like with, fighting with banks and all that sort of stuff. So that's been really positive. So we've had a lot of people stepping back into the market. I feel over the last 3 months, it's been really, really busy.
Yep.
I think that's probably because rates are continuing to come down. Like I know there's been a bit of hoo-ha on the fixed rates and the 4 and 5 years stepping back out. I think that's just more protectionism from the banks to control their margin. But the variable rates across investors, owner-occupier, whatever it may be, have continued to come down. Like we've got variable rates now 2.3, 2.4 for owner-occupiers. I've spoken about investors in past weeks, 2.5s and up to those low 3s, late 2s for interest-only loans. So there's that much incentive out there for borrowers. It's been a really busy time.
That's great. And we've actually seen a few investors come back into the market, which is positive. So they're not competing as much. I think inquiry levels have slightly dropped a little bit in relation to properties for sale. So it's giving investors more opportunity to be purchasing, because when you're purchasing for an investment, it's not a heart decision. It's not an emotional decision. It comes back to numbers, because an investment property is a business, and it's a business for your financial freedom.
Yeah. Absolutely.
Let's chat negative gearing versus positive gearing. Let's break it down in normal speak. We're not accountants, we're not financial planners, so do seek your own advice on this. But we just want to educate on what is negative gearing versus what is positive gearing. Yeah,
I think this is something that gets thrown around a lot. Personally, I think negative gearing right now is probably hard to find, because essentially, the crux of negative gearing is that the income you're receiving for the property is less than the expenses. So the expenses are, like interest, rates, repairs and maintenance, whatever else.
Outgoings.
Outgoings, yeah.
Yeah.
So, when the income's less than the outgoings, the expenses, then that property is negatively geared, because it's going to show as a net loss for that year that it's, been a part of your position. Obviously, on the contrary, positive gearing is when the income equals more than the expenses.
So the expenses, outgoings, loan repayment, interest. So you're making money from the property is your positive geared. Negative geared is you're actually losing money on that property. And why people use negative gearing is pretty much to offset tax. If they're earning big incomes or they've got big businesses and they kind of just offset.
Absolutely, and if that's something you want to have a chat about, then your accountant or financial planner or advisor is someone that can run through that stuff and whether it actually makes sense. But if you're hearing that terminology, that's basically what it means.
Yep, so you're either positive, you're making money from the property, negative, you're actually losing money on the property.
And people would know, because the ones that are negative is where you have to chip in 50 or $100 a fortnight, a month to help with those repayments and stuff like that. That's generally when you're going to know there may be the potential.
Yeah, definitely. So if you have any questions, if we can help you, if you haven't looked at your loan recently, we suggest you do. If you are looking to get into the market, please reach out to either Nick or myself. I can put you in contact with Nick. Obviously, details are below in the video. We look forward to helping you, and we want to chat with you to help you secure financial freedom through property. Thank you.